Well, the markets may be closed today, but there's still money to be made. And we are taking a look at the sectors that could be the next to really take off. Riley FBR's Chief Global Strategist, Mark Grant, joins us now. Mark, you know, this has been a remarkable start to this year. And who would have thought, well, maybe someone did, that Russell would be up 10%, the best performing big index. And then, of course, energy leading the way, financials living up to some of their old hype maybe from a year earlier. Where do you see all of this going?
I think our economy is in relatively good shape. I think there was tax loss selling. There was a lot of people moving money around. There was a lot of pressure on the mutual funds, on the exchange-traded funds. And then I think people became more rational and looked at where the economy is, and things are starting to improve, and I expect them to keep improving. How's that?
Well, that's great. But the question, I guess, is what does it mean for the market? Because, you know, you've got some folks out there, the biggest fear is the Federal Reserve. And if things are too great, maybe Powell and company come in and start to put some speed bumps on this economy.
Well, I think one of the great parts of what's happening right now is that the Fed, and there are people at the Fed that get my commentary, or maybe they listen to President Trump, they've slowed this thing down significantly. Both the chairman, Chairman Powell, and the vice chairman, Williams, have basically said, we're going to look at this, we're going to slow it down, we're going to not have the balance sheet of the Fed on autopilot, and we're going to react accordingly. They're also looking at the global risk, which they both have talked about, the slowdown in China, a hard Brexit, the problem with the Italian banks, and they're saying, we're going to slow it down, moderate this, which of course means that borrowing costs won't be going up so quickly. And I think that's very positive for the economy and for the markets as a result of that.
So far, sector-wise, the financials doing very well. Bank of America may be looking like they saved the big banks. All week this week, we've got smaller regional banks reporting. Material names have done very well. Industrial names have done very well. Are these the kind of sectors that can lead the broad market? And do you think, and what sectors do you like, by the way, Mark?
Well, I like, depends what you're trying to accomplish in the terms
let's say
of
longer term,
yield.
Let's say longer term, you know, asset appreciation of the account. You know, you want to make money in the market.
Yeah, as I said, if you want yield and you're looking for monthly income, I like closed-end funds. If you're looking at appreciation, I like things attached to the new 5G network that's coming out, which means the telephone makers, the cell makers, which means the cell providers, which means some of the chip makers that are heavily involved in this, which means the antenna companies, because we're going to have a lot more antennas. I'm very positive on all of the companies associated with the 5G network rollout.
We got you, Mark. Thank you very much. Appreciate it.